Hey, what's up, my friends? So in today's episode, I want to share with you the 5 brutal trading truths that nobody tells you. So are you ready? Number 1, you need money to make money in this business. So I can't tell you, right, how many times I've seen comments from traders who say something like this. Hey, Rayner, if your trading strategy is so good, right, you won't be, telling or sharing it with us, right? You'll be using it to make millions off the financial markets. Well, guess what? Here's the thing. I could have the best trading strategy in the world. Okay, but if I don't have any money or capital, that trading strategy is useless. Okay, so think about it this way, right? If you have the ability to make, let's say, 20% a year on $1,000 trading account, that's about $200 a year. On a $100,000 trading account, that's $20,000 a year. On $1 million trading account, that's $200,000 a year. The same 20% a year, same risk management. The only difference is the size of your account, and that results, right, in the difference in how much money you can potentially make. So ingrain this in your head, right? It doesn't matter whether you have the best trading strategy in the world, because if you don't have any capital, if your capital is small, guess what? You're not going to make much of money at all. This is the truth, right? And this is the same reason why you see hedge funds wanting to raise money, raise billions of dollars. Clearly, they have a trading strategy that works, but why do they want to take in outsider money? Why do they want to answer to potential clients when losses come? Because they know that you need money to make money in this business. It's only the retail traders, the one after, fantasizing about, trading off on a beach, sipping their pina colada, that thinks that they can get away with a $50 trading account and turn it into 6-7 figures within a few months. No, not gonna happen. Number 2, in trading, the learning curve is steep. And if you ask me, anything worth while pursuing, right, the learning curve is steep. Whether you be a doctor, an engineer, even a car mechanic, right, you need years, right, to gain proficiency. And in trading, it is no difference. In your first stage of your trading career, you're probably excited about your dreams, your hopes, learning all the different trading strategies, indicators from A to Z, and then you kind of realize that, okay, maybe I shouldn't, be focusing so much on the tools, the strategies. Then stage 2, you go into your risk management, where you need to risk 1-2% of your account on each trade. Stage 3, you start to discard what you've learned and focus on the stuff that really matters. And stage 4, hopefully you become consistently profitable. So these are generally the 4 stages, right, of what a trader goes through. And you can't complete all 4 stages within 3 months or 6 months. You probably need years to complete the full cycle. Okay, so learning curve in trading is steep, right? If you are looking for shortcuts, you are looking for a weekend seminar to turn you into a pro trader, then spend your money elsewhere. Number 3, you'll be in a drawdown most of the time. So what do I mean by drawdown? So very simple. Let's say you put in $100,000 into your account. Your account goes up to $120,000. So let's say that's the highest point of your equity curve. Let's say from $120,000, it drops down to $110,000. That means that you're in a drawdown because you are now below the equity high that you had previously. So most of the time in trading, you'll be in a drawdown. If you ask me, I would say 70-80% of the time, you'll be in a drawdown. You won't be making new equity highs every week, every month. Okay? You'll be in a drawdown most of the time. And this drawdown is a function of largely your winning rate. The lower your winning rate, right, the longer the drawdown you'll be. So that's why, for trend followers who have a low winning rate, they are in a drawdown most of the time, 80% of the time or more. If your winning rate is higher, then your drawdown, the duration of your drawdown can be reduced. Okay, so, but nonetheless, right, embrace the fact that you'll be in the drawdown most of the time. Number 4, sad to say, right, from what I'm seeing based on the comments, the attitude of traders that I've come across, most of you just simply don't have what it takes. I mean, yes, right, you get hyped up, your hopes, trading is a means to your financial freedom, you can fire your boss, passive income, blah, blah, blah. But all this takes time, takes work, takes money before you kind of, reap the rewards. And most of you just don't have what it takes, right? You will probably just give up at the first obstacle you face. Like maybe, your trading strategy isn't working, you hop from multiple strategies and you realize, man, trading is a scam, it doesn't work. Or maybe you blow up multiple trading accounts, you're sick and tired of it, let's move on. And after multiple setbacks, right, the number of traders who are still wanting to pursue this endeavor gets smaller and smaller. So it's kind of like a funnel, right? At the top is a lot of people coming to the funnel, right? All the hopes, all the dreams, all the bikinis, the babes, the Lambos. But as the years goes by, it's like a funnel where a lot get eliminated and it gets slimmer and slimmer, just left at few percent, right, who continues to pursue this endeavor. So I want you to be prepared, right, that this is really, right, a long-term thing. It's not like, we're not talking about months or just 1 or 2 years. If you ask me, if you want to get good at trading, prepare to invest, right, 5, 10 years or more, right? This is really a long-term thing. It's like, raising a kid, right? You don't have a kid, right, for the sake of, looking after them for the next 3 to 6 months. No, it's long-term. It's kind of like for life. And this is the attitude that you should bring into trading. Long-term, for life. If you can't commit to it, right, then go do something else, watch Netflix, play some games, and pretty much do, things that, that make you happy, right? Why do something half-hearted, get unhappy, lose money, waste your time, when you can, do something else that could make you happy, but at the same time, might not make you money, but in the long run, you think about it, right? At least you don't lose money. Okay, so moving on, the last thing is that in trading, you must have an edge in the markets, right? So this is again something that you must know, right? It doesn't mean that, oh, Rayner, I risk 1% of my account on each trade. I have a minimum of a 1 to 2 risk reward on each trade. That is my target. Well, guess what, right? Doesn't matter, right? If your trading strategy doesn't have an edge in the markets, you're not going to make money. Simple as that. Don't believe me? Go down to the nearest casino. Okay, you can apply the best risk management. You can bring a psychologist with you. In the long run, you'll still lose money to the casino. Why is that? It's because the house have an edge over the players. Unless you have a way to extract an edge right from the casino, in the long run, you'll lose money. Regardless of your risk management, regardless of your risk to reward ratio, regardless of your trading psychology, without an edge, right, all of that is useless. So with that said, right, let's do a quick recap, right? Number 1, you need money to make money in trading. Number 2, learning curve is steep, be prepared for it. Number 3, you'll be in a drawdown most of the time. Number 4, most of you don't really have what it takes. Number 5, you must have an edge in the markets. And if you want to learn a new trading strategy, a system that have an edge in the markets, then you can check out Pullback Stock Trading System. This is a 31-page trading booklet that will share with you a specific trading system that you can use to trade the stock markets. You can go down to the website, pullbackstocktrading.com, and learn more about it. So with that said, I wish you good luck and good trading. I will talk to you soon.